In this part we will discuss employee contribution in Provident Fund. Types of Provident Funds recognized for under Section 80C deduction. The features of the investment in Provident Fund. And advantages and disadvantages for investment in Provident Fund. Firstly, let's take a quick view of some of important investment for tax saving. Maximum of ₹1,50,000 deduction for income tax is available by combining investment in these three sections. Section 80C. Section 80CCC for pension products. Section 80CCD 1. New pension scheme. 80CCD 1B. Additional deduction for amount contributed to NPS of up to ₹50,000. 80CCD 2. Employer's contribution under Section 80CCD 2 towards NPS is outside the monetary ceiling of ₹1,50,000 deduction. Following options are available for deduction under Section 80C, 80CCC, 80CCD 1. The maximum deduction combining all these investments or expenditure is ₹1,50,000. Investment option, debt. Provident funds, EPF/VPF. Public Provident Funds, PPF. National Savings Certificates, NSC. Senior Citizen Savings Scheme, SCSS. Tax Saving Fixed Deposit, for 5 years. Investment option, other. Life insurance premium. Pension plan from insurance company. New pension scheme, NPS. Tax Saving Mutual Fund, ELSS. Sukanya Samriddhi Account. ULIPs or Unit Linked Insurance Plan. Other investments. Tax Saving Expenditure. Principal payment on home loan. Stamp duty and registration cost of the house. Tuition fee for 2 children. In this part we discuss employee contribution in EPF/VPF. Firstly we will discuss type of Provident available. Recognized Provident Fund, RPF. This scheme is applicable to an organization which employs 20 or more employees. An organization can also voluntarily opt for this scheme. All RPF schemes must be approved by the Commissioner of Income Tax. Here the company can either opt for government-approved scheme or the employer and employees can together start a PF scheme by forming a trust. The trust so created shall invest funds in specified manner. The income of the trust shall also be exempt from income taxes. Unrecognized Provident Fund, URPF. Such schemes are those that are started by employer and employees in an establishment, but are not approved by the Commissioner of Income Tax. Since they are not recognized, URPF schemes have a different tax treatment as compared to RPFs. Statutory Provident Fund, SPF. This fund is mainly meant for government/university/educational institutes, affiliated to university, employees. Deduction under Section 80C is available for contribution in Recognized Provident Fund, RPF, and Statutory Provident Fund, SPF. Now let's discuss the employee contribution in EPF/VPF. EPF is mandatory for salaried employees working for companies with more than 20 employees. Under EPF rules, employee need to contribute 12% of basic pay and DID to EPF. The employer matches this EPF contribution. Employee have option to put up to 100% of basic pay and DID to EPF. This is known as Voluntary Provident Fund, VPF. Employee can opt for VPF by giving a request to company at the start of every financial year. Only employee contribution in EPF and VPF is considered for tax deduction. Repayment of sum on retirement, resignation, or termination is not taxable subject to following conditions. Employee left the job after 5 years of service or where period of service less than 5 years. The termination is due to ill health, discontinuance of business of employer, or here on re-employment. The balance in R.P.F is transferred to R.P.F with new employer. For the purpose of computing 5 years period of services rendered with previous employer shall also be included. In Statutory Provident Fund, SPF, employee contribution, employer contribution, interest on Provident Fund and repayment of sum on retirement, resignation, or termination is fully exempt. Advantages of investment in EPF/VPF. The interest earned on EPF/VPF up to 9.5% is tax-free. Can take loan against EPF and also do partial withdrawal under certain conditions. Convenient to invest as the amount is directly deducted from salary. Employer contribution to EPF is exempt up to 12% of salary. Disadvantages of investment in EPF/VPF. Money is locked till retirement. The EPF interest rates are market-linked and set by EPFO every year. Hope the presentation is useful for you. Your feedback is important for us. Write us at tldcdeli@gmail.com. Call us at 0999-988-2345. In the next part of How to Save Tax, we will discuss investment in Public Provident Fund. Never miss a change. To view new videos, subscribe our channel. Currently the subscription is free.